You highlighted at the beginning the role of the financial crisis, and then you devoted a little bit less time to this. And the financial crunch is one element which may last for long, which has possibly structural causes and has long-term impact. We may need a new model for the banks. The uncertainty regarding regulation all over the world might be an element which prevents for lending. And again, we see the public sector in the countries where it's possible to substitute for the private. So what are your views about the fact that we have this nexus between the role of the public sector and the private sector, not only fiscal stimulus, not only for capital flows, but also for the financial system? And what are your views on this third element?
Well, that's a good question. Certainly, as someone trained in Chicago, I have a strong confidence on the private sectors. But we also know we are in a crisis time, and we need to have a government to step in, especially for those kind of long-term projects. I think everyone sees the needs there, but private sectors may not be able to come up with the fund in a good time for a long-term project. And in a bad time like now, it's even harder for them. And so that's the reason why I call for the action of the government, with the assistance of the institutional development institution like the World Bank, like IDB, and many other regional banks, because that's our mandate, right? International Bank of Reconstruction and Development. And that is exactly our mandate, our expertise. And so if we give up our expertise at this time to do this project, we will facilitate the development of the private sectors. Because those kind of infrastructure projects, no matter it's hard infrastructure like highway, public utility, and port facilities, or human capitals, education, and healthcare, and those kind of things, it will increase the private return to investment. And I'm sure after the crisis, with a good infrastructure, then the private activity will increase. And we are going to have a much more efficient and equitable world also.
Yes, sir. Anthony Johnson, Jamaican ambassador, and thank you so much for your plug for the developing countries. And I sincerely hope that the $2 trillion starts to flow as soon as possible. What I wanted to ask, though, is this. My understanding is that one of the factors that started this downward trend was lack of confidence because of the allegation that there are toxic assets in the assets of many countries who have reserves on the books, but there is doubt as to the actual liquidity or indeed the viability of some of these toxic assets. I think it would help very much if we were to identify, and maybe it has been done, and we would be happy to hear, how much of the assets are indeed toxic, and how are we going to get rid of them, write them off or whatever, so that confidence of consumers and bankers can return, so that bankers can start to lend money, because you're not lending money because you are afraid the assets you get might indeed be toxic. Or is this toxic asset business a dream that, you know, journalists dreamt up? Because I do think that that is at the bottom. But certainly, sir, I wish to thank you so much for suggesting that investment in infrastructure and capacity building, particularly in developing countries, is the way to go, and not to think in terms of beggar thy neighbor 1929 type policies. Thank you.
Okay, that's a very good question. Toxic asset is toxic because their price is too low. And why their price is too low? Because of the demand is smaller than supply, excess capacities. Unless you deal with the excess capacity, they will be toxic. Even you separate them from the bank, set up banks with all those toxic assets, they will still be there. As long as they are there, their supply, they are going to depress the price of the existing other asset. So from what I see, the bad bank idea and so on certainly important to regain the confidence of the banking sectors, financial sectors. However, it did not solve the issue that excess supplies are there. And to solve the issue of excess supply, we need to increase the demand. And increase the demand, now the government need to play a very important role. As long as the demand increase, people have more jobs, their wage increase, their demand for those toxic assets will increase. Price will increase. Once price increase, they are not toxic anymore. So that's my solution. And here I'd like to mention again, the Global Recovery Fund I mentioned, it's not a grant, it's a loan. And a high-income country is making an investment with a high return. And so that should be a win-win situation for everyone.
Bob?
Hi, Bob Davis with the Wall Street Journal. Two questions. One on your recovery fund.
Yeah.
If the problem basically in this crisis is in the industrialized countries, why shouldn't the money go to the industrialized countries, the fiscal money, the fiscal stimulus go entirely to the industrialized countries where the problem is, where if you're investing in the, into the really poor countries where you only get a very indirect return. And secondly, you were talking about how in China the money that went into the bottlenecks had such a great return and did so well. But in Japan, the fiscal spending didn't seem to do much. Is there some drop-off in the efficiency of fiscal spending when it comes to wealthy countries as opposed to developing countries?
Excellent questions. Give me an opportunity to explain more about my concept. And do you have other questions?
No, that's
those are two questions. Okay, excellent. The reason why I think the high-income country need to support investment in the low-income country exactly try to deal with the question you raised. We know high-income country, they don't have so much space for high-return infrastructure project. I mentioned green economy might be one area, a bottleneck for future growth. And if you look into infrastructure, they are high-income country. Their infrastructure, certainly there are some room for improvement. But the room is very small. If you look into what Japan did in 1990s, their infrastructure project is digging out the road, pave the road again. Certainly it looked more beautiful. But it did not increase productivities. In low-income country, if you go to Africa, I just returned Nigeria, Ghana, Ethiopia, their factory need to close 3 days or 4 days a week, because lack of electricity. You go to the road, congestion. You take hour to wait in the port facility and so on. And so if you invest in those areas, it will increase the productivity of the private sectors. It can generate a very high return. And the reason during the same fiscal stimulus periods, Japan did not have those kind of effect, and China had it. That is because the comparison of this gives me to this idea, so-called growth inflation, enhancing bottleneck relation type of fiscal stimulus. And the reason why high-income country need to invest in a low-income country is because high-income country do not have so many opportunity of those kind of investment. You make those kind of investment in a high-income country, the case of Japan is going to repeat it. You spend a lot of money, but people understand they need to pay for that in the futures. So they are not going to spend to increase their consumption. But we know that if we look at individual countries, certainly you say it's a closed economy. If I invest in the low-income country, will that create a demand for me? or not. But we know, globally, we are in the same families. We only have one Earth. We are having a closed Earth economy. So no matter where we put the money, the demand will be the same.
Justin, could I ask kind of a variant or a follow-up to Bob's first question? You were several times noting the need for coordinated fiscal stimulus, and you were very specific with your global
recovery
plan for investment in the poorer countries.
Yeah.
But how about among the industrial countries?
Yeah.
Would you advocate common levels of investment, 2% of GDP, in fiscal stimulus programs by the rich countries? Would you, in light of what you were just saying, advocate some coordination of the nature of the fiscal stimulus programs? It sounded like you were implying maybe you would prefer tax cuts than infrastructure spending in the rich countries on grounds of lower productivity payoff. So talk a little more about how you would imagine the coordinated fiscal stimulus occurring among the rich countries as a complement to what you talked about going into the poorer countries.
I'm very delighted you asked this question because you are asking operational issue.
That's right.
And that means you basically agree with my stance. Otherwise, you're not looking into the operational issue.
You got it. And trying to figure out how to make it operational.
And for that, I think you have more wisdom than I do. But I like to risk a little bit of that. Like Oliver Blanchard, my partner in IMF, he argued for 2% global GDP for fiscal stimulus. And if we say 2% of how much was that money? That was 1.2 trillion US dollars a year. Among those 1.2 trillion US dollars a year, we set aside about 1/3 for this, 1/4 for this global recovery fund. The other 800 billion US dollars can be used in the high-income country. And among those 800 billion US dollars, because some area like green economy, some improvement in infrastructure still possible. They can use those money for that. And the others can be tax cut. They need to have a combination of that. I do not argue just one type. It should be a combination, and the criterion, like we are economists, always say which one has the largest marginal impact. And my priority is global recovery fund in the developing country has the highest return, should be a priority. And then depends on the condition in each country. They may have some kind of mix of this stimulus.
Yeah, I think it's worth noting implicitly what you're saying is that we should all be viewing our economic recovery programs as aimed at global recovery, not a set of national recoveries.
Right.
And that's a very important conceptual distinction, which is hard to sell to Congresses and parliaments, but which I think in a real sense you're right, because this is a global crisis. And when one talks about resisting trade protection, the underlying concept has got to be that we're aiming at a global economic recovery where it doesn't make any sense for individual countries to try to fob off the costs of their recovery on others.
Right. And that's also the reason why I come to the Peterson Institute for this talk.
Thea Lee.
Hi, Thea Lee with the AFL-CIO. I actually want to follow up on this last point. It's the interplay between your 2 points about the need for fiscal coordination and the need to avoid what you're calling protectionism. And I think two things are important. One is that I think there should be a distinction between protectionism of the sort which is raising tariff barriers along the lines of what happened with the Smoot-Hawley, and protectionism, which the word is used very loosely to talk about governments using their own procurement dollars in their own countries. And I guess the question I have is, if there is a failure to coordinate fiscal stimulus at an appropriate scale, then isn't it rational for governments to want to make their own fiscal stimulus get the most bang for the buck? Because, our view is that the current stimulus that we're talking about here in the United States is inadequate even to stimulate the U.S. economy, that we need something larger than $800 billion over the next 2 years. It's certainly inadequate to stimulate the global economy. And if other countries aren't stepping up to the plate, and of course our decision is going to be made over the next week or two, and there hasn't been the coordination of fiscal stimulus across countries. So in that sense, the limited sense in which governments make what I would consider a rational decision to say, to the extent that we're going to spend this money, we need to make sure that it actually works. And so we want to take that decision within the context of our international trade obligations, and that's very different from saying we're going to stop trading with the rest of the world.
All right, that's also a very good question. From what I see, only avoiding protectionism is not enough, because that's not going to create a large enough demand to get out of the excess capacity situation. And my focus, although I won against the protectionism, but I focus on the Global Recovery Fund, is that as only as the country come to the table, agree with the Global Recovery Fund, they will not do the protectionism. By definition, right? So that's, again, one stone, kill two birds. And at the same time, if we cannot come into this Global Recovery Fund, the danger for protectionism is very high. I read the newspapers. I can understand the heat in the Capitol Hill. But if we allow the protectionism to run away, I think we are in a very dangerous situation. We as economists, we should do our best to avoid that.
Herb York?
My name is Herbjørn Hansson. I'm coming from the other side of the ocean, from Norway to be specific. And I'm in international business. I'm carrying oil in big tankers all over the world. And we see this at a very close distance. We carry a lot of oil to your country. We carry a lot of oil to this country. I would like just to make a few comments, and I have one question. The reasons and I used to be an economist many years ago. My business is the freest business in the world in an economic textbook sense of the word, the tanker business. And the reason for this crisis is very simple. When a person, when a company, or when a country go on the borrowing binge too long, you are up against problems. It is as simple as that. I've seen it many times in my business over the last 40 years. Just a comment on Japan. They were in the ditches for about 10 years for one specific reason. They did not fix the banks. We must fix the banks nationally and internationally, because the banks are the heart of the world economy. In our small country, Norway, they released a new package today, which in our context is quite big, about $15 billion of bond loans and semi-equity provisions. But I think we must bear in mind this is an extraordinary situation, and extraordinary situations require extraordinary measures. There is a danger that we look too much to the past and that we are too much back-looking. We must try, as you said, sir, in your eloquent presentation, we must be imaginative, we must be innovative. And in my judgment, there is one, and it's a very simple reasoning, there is one measure that will work, and that is tax cuts, fiscal measures, for most people. When you have a tax cut, what happens? As individuals, either you spend the money or you put it in the bank. If you spend the money, it stimulates the economy. If you put it in the bank, it stimulates the bank, and you are able to lend more money. I think that in all these nice economic intricacies, we must remember the simplicity, and that is economic development starts when we take out our wallet from our back pocket and we start buying something. That is where economic development starts. I more than agree with you that we should support the poor people of the world and put them on a good footing. Some comments on tax cuts, sir. Thank you.
Well, thank you very much for the comments. And I think that, I agree with you that we need to fix the bank. We need to, recapitalize them. We need to deal with the tax asset issue. But again, as I argue, as long as those assets does not disappear, they are still there. They are still something need to be demanded. And with the excess capacity in real estate sectors or in the manufacturing sectors, the price is going to drop continuously. So fundamentally, how to stimulate demand is still the key issue. And you said that put the money in the bank or consume now. Consume now, people may argue in the future they need to pay back. Put the money in the bank where the bank has opportunity to lend out. It's an issue. As I say, the Kuwaiti situation. The bank is healthy. They are waiting people to come to borrow. They even approach some people. But they don't have those opportunities because excess supply there. So I think my concept of large enough stimulation in the demand, which create short-term demand, pay the long-term growth, pay the cost now. Again, I'd like to, have your attention and hope to get your support also.
Okay. Yeah.
Thank you. This is an intriguing and hugely important topic. My name is Jo Marie Griesgraber. I'm with New Rules for Global Finance. I have 3 quick points. One is with regard to increasing demand. We also the financial crisis is coinciding with an environmental crisis. And so by stimulating the demand, can the planet sustain it? So how are you looking at economic sustainability with environmental sustainability? You've touched on green investments and green energy, but what you have in mind from the bank doesn't sound that way. The other thing is just there's a smell test. When someone from the World Bank comes in and says we need $1 trillion facility for us to administer, I'm going, oh boy. You'd really have to take an honest look at the track record of your own institution, which doesn't always stand up very well. And then a third element, what is the role for China in this? China is clearly a place where you could stand a lot of increased demand, and that would change your growth model pretty dramatically.
No questions. And I fully agree that environmental issue, climate changes should be high on the agenda. And that's one area I mentioned for the high-income country, including the US, EU, Japan. They need to use part of their fund for that investment. And for the low-income countries, when they carry out those kind of infrastructure projects and so on, certainly the concept will be built in because that already in the bank agenda. And you know that recently we have several initiatives, the clean energy initiative and the climate change initiative and so on. And all those initiatives try to build in our project. So if the World Bank, not only the World Bank, I'm sure Inter-American Development Bank, Asia Development Bank, Africa Development Bank, when they try to facilitate the implementation of this kind of project. That will be there. And I think that with the international organization and supervision from you, monitoring from you, I'm sure we will live up to your expectation. And regarding that, I'm the World Bank officials, I'm arguing that you need to channel more funds to the World Bank. My criterion is that I am a citizen of the world. I work for the world. I happen to be the World Bank. If I'm not in the World Bank, I'll say the same thing. And regarding the Chinese role, certainly, China is a very important part of this equation. Domestically, China needs to do the effort to stimulate the growth by its fiscal stimulus package. At the same time, I indicate, China is the largest reserve country. China also needs to participate in this global effort.
Justin, could I push you to talk a little more about China's role, since China has been the main driver of world economic growth the last few years. You said three things in your remarks that were relevant. You pointed to the problem of excess capacity as a source of the current crisis. A lot of that was China. We would say here, driven by some mispricing, subsidized energy prices, suppressed interest rates, undervalued exchange rate. Can all that get changed in order to permit China to take the lead role here? Second, you talked about the fear that savings rates will go up everywhere and suppress consumer demand, but China already has the highest saving rate by far in the world. Is there a way to get that down now so China can play the role we need? And third, you talked about the fiscal constraint, lots of governments, but not China. Fortunately, goes into the crisis with a strong fiscal position. So elaborate for us if all those things suggest that China really could and should be the leading engine of recovery from this global crisis.
I think now we need to distinguish two issues. One is short-term crisis issue and a long-term sustainable growth issue. And for the short run, certainly, China needs to do whatever means under its command to increase the investment demand as well as consumption demand in order to push the demand. And if China can push up the domestic demand, certainly the surplus for export will become smaller. It contributes to the solving of the global imbalances. At the same time, I do argue, in addition to this kind of short-term fiscal stimulus, China should simultaneously carry out some structural reform. The reason why China to save so much is because of worsening of income distribution in the past 30 years during the reform. And the reason that the worsening of income distribution was the lack of its reform in certain sectors. We know that China adopted a gradual approach to reform. So that means many distortions inherited from the planning system has not been removed yet, including the financial sector has been dominated by 4 state banks, and only large corporations and rich people have access to those kind of financial services at a subsidized rate. Secondly, the taxation in the natural resources, basically none, although China is a resources poor country, and some remaining monopoly in the telecommunication, financial sector, and so on. And with this kind of lag behind in the reform, the income distribution favor large corporations, favor rich people. And we know that rich people in general, their consumption propensity is low. Their saving propensity is high. And the poor people, their saving propensity is low, consumption propensity is high. However, if you look into the income distribution, the income distributed to the poor people, working classes, becomes smaller and smaller. And so when we look into the saving in China, you can see very striking. If the household saving, compare household saving in China to India, China is not that high. In a similar league, about 20, 23, 24%. But the other 20, 24 of saving comes from corporate saving. Corporate are large corporation and the corporate owned by the rich people. So I do argue, during this crisis period, China not only need to carry out the fiscal stimulus, China need to simultaneously carry out those kind of structural reform. Fundamentally, if China can carry out those kind of reform, it also one stone kills two birds, because the real challenges for any downturn in any economy is employment issue. And those kind of reform I advocate will favor the small and medium-sized enterprises, will create jobs in the short run, improve income distribution in the long run, and also contribute to the issue that you concern, global imbalance.
Okay, more questions, comments? Lex?
Dr. Lin, I'm Lex Riefel with the Brookings Institution. I have a lot of sympathy for the idea of investing in low-income countries to remove bottlenecks. But then you mentioned loans, and you mentioned the World Bank. And what this made me think about was the preferred creditor status of the World Bank and the regional development banks. And I'm wondering what some of the implications may be of putting large amounts of money, lending a large amounts of money to these developing countries through institutions that have preferred creditor status. Would this be setting us up for another kind of HIPC problem in the future?
Well, I think that first, at this time, if you make those kind of investment, it has no crowding out effect for the private sector's investment at all, because fundamentally, private sectors are not functioning. And so you make investment, no matter it's through World Bank or other regional development bank or other development institutions, it has no crowding out effect. Unlike in the normal time, when private sectors are very active in the market, at that time we see the inflation rate in many developing countries already been so high, and if the World Bank or other regional development bank want to enter in to invest in those kind of infrastructure projects, no matter it's in hardware or software, it's going to have some kind of competing resources, as you notice. But I'm talking about a situation quite different now, because private sectors, they basically do not have the confidence. They do not have the means to overcome the depressive market situation. And so if the World Bank and other regional development banks can come in, no crowding out effect. Not only so, as I mentioned, once this kind of bottleneck is released, in the futures, after the economy coming to the normal, it will create a much better environment for the private sectors. It will facilitate their activities.
Okay, yes, right here, and then back there.
Hi, I'm Liu Hong with Xinhua News Agency. In the speech, you warned against the protectionism, and I think many economists here are also against it. So how do you think of the Buy American provision in the stimulus package, and how will other countries respond to this challenge? Thank you.
I think that a valid question. Protectionism is there. We need to warn against that. But my position, warn against the protectionism is not enough. Fundamentally, politicians need to have alternative in order to create a job for their people. If they can create a job for their people, I think the politicians, they are very smart. They are economic advisors. Many of them are good friends, are people I respect. They understand the issue perfectly. And so that's the reason why I come here to argue an alternative which can stimulate short-term demand, create a job for everyone, pave the foundation for long-term growth in the future. Once that concept is accepted, turning to operationalized, then there's no need for protectionism at all.
Justin, you asked if we here at the Peterson Institute would join hands with you in resisting, and I would just call everybody's attention to a new policy brief that's in your packet we handed out today, in which our trade team of Gary Huffbauer, Jeff Schott, did a really very rapid analysis of those provisions in the two versions of the congressional stimulus package. Bottom line conclusion was that the gross job payoff would be very small. The net job payoff could well be negative, so even within their own terms, we weren't sure it would be beneficial. But that going beyond that, for the U.S. to take steps in that direction at this time would be a very bad signal for the world economy. And our bottom line suggestion is that when the G20 meets on April 2, that it adopt a binding standstill agreement against any increases in trade distortions, whether or not legal under the WTO. There's a lot of legal protectionism out there. Many countries have done it. Some things could be done under the Buy America law, which, as Thea said, would be legal under the WTO. We happen to think it's a bad idea and ought to be resisted. But it'll be up to the leaders politically to stand up and say that. And we think a binding, comprehensive commitment at the upcoming G20 is the way to do that. Yes, sir.
Thank you. My name is Dong Hui with the China Press, and I just wonder what mechanism the World Bank will establish to implement and monitor the global recovery plans and also determine how much money that the United States should contribute to the plan and how much money from China is suitable. Thank you.
Well, that's a very detailed operational issue. Certainly, there are some kind of simple rule. That is percentage of the GDP in the global economy, and that might be one principle, or other principle. And that certainly should come into the negotiation table after they have the commitment for doing that. And I do say we already have some mechanism like G20 or other bilateral arrangement for people to sit down the table and to come up with an agreement how much they should contribute.
Would you like, I assume the answer is yes, but let me ask, would you like to get this, the Global Recovery Fund, on the agenda for the G20 meeting in April?
If, with your help, it can be put on that agenda, I appreciate it.
Patrick?
Mr. Lee, Mr. Hansen here, he said part of the problem was that America was borrowing too much and living beyond its means. Yeah. And do you think that the underpriced currencies of Asia contributed to our living beyond our means by running these large current account deficits? And do you think that it's protectionist to ask the Asians to let their currencies appreciate in value?
I think that the question regarded two. One is excess consumption, excess borrowing in the U.S. And we know it's a structural issue because of the wealth effect due to the bubble, financial innovation, allow people to monetize their assets and so on. And also the fiscal deficit because of the international situation. And for that, at least the first item disappeared. With the burst of bubble, the loss of wealth, people in the U.S. now start to save, and we see that. And that's the reason why, import to the U.S. reduced so much. And now the issue is not how to encourage the saving, saving in the U.S. I think now the issue is that how to help the American people to increase their confidence so their consumption can be returned to the normal situation. And the second one regarding the, whether there's some kind of under evaluation of currency and so on. I think there are many studies about that. Some argue it's undervaluation of the currency. Some argue it's a structural issue, and so that's debatable. But fundamentally, I think we all agree now. This may not be the most important issue now. That is a feeling I get from the Davos. people think more important is how to stimulate demand now, no matter it's investment demand or consumption demand. And structural issue, as I mentioned, over-saving in China contribute to the lower consumption, and if you have such a large production capacity, low consumption domestically, certainly you will export that. And for that, need to carry out with some kind of structural reform. And regarding the currency issue, I think U.S. and China have some kind of a very good mechanism, that is strategic dialogue. And I think politicians will discuss that issue during those kind of occasions.
But less important does not mean unimportant.
Well,
one more and then we have to break up. Last question.
Thank you. My name is Zhen Yu from Shanghai Wenhui Daily, China. I have two questions. First, there is a huge economic stimulus package pending on the Capitol Hill. So I want to know, there's a lot of hot debate on that. I want to know what's your comment on it. The second, last November, the G20 summit has achieved a lot of agreement. I want to know what's your evaluation about the current issue. I mean, is there any essential progress since then? Thank you.
Well, for the first one, it's debated in the Capitol Hill. I watch the television every day, and I keep my finger crossed, hope it will be passed. The sooner the better. We need to have the U.S. to play the leadership role, to restore the confidence, to set up an example for other countries. And I did not fully get your second question.
G20. Any progress since the G20?
I think that in the G20 meeting in November, I think in spirit they are in right track on many things. For example, maintaining the openness, need to have a coordinated action. But when they go home, because of domestic issues, try to deviate from that. And I hope that with the study, so many working groups, with think tank in the Massachusetts Avenue and other countries, we hope that in the April meeting, the G20 meeting can come back to the right track again.
Justin, we thank you very much for a very creative analysis, some very courageous ideas. We look forward to keeping the dialogue going.